All right, so we're going to take a deep dive today into the Eurozone economy.
All right.
And it looks like there's a lot going on,
Yeah.
you know, some good, some bad.
Right.
So if our listener is thinking about maybe a European vacation or just wants to know how things are going across the pond,
Yeah.
this is where you want to be.
Absolutely.
Yeah.
It's a really interesting time to be looking at the Eurozone.
Yeah.
I mean, one of the things that's so fascinating is, how different sectors are really telling different stories.
Okay.
And like the service sector, for instance, is really showing some unexpected strength lately.
Okay, so like break this down for us a bit. What's making the service sector so strong in the Eurozone?
Well, one of the key indicators we look at is the Purchasing Managers Index,
Right.
or PMI, which basically gives us a pulse check on different industries.
Okay.
And anything above 50 signals growth.
Right.
And the service sector PMI just jumped to 49.4.
Okay.
So not quite in growth territory,
Right.
but it beat predictions,
Okay.
which suggests some underlying strength there.
Interesting. So people are still spending on services even with all the, the economic uncertainty. What does that tell us about the mood in the Eurozone?
That's a good question.
Yeah.
It could mean that consumer confidence isn't as shaken as some might think,
Okay.
or it could point to like a shift in spending habits,
Yeah.
with people prioritizing experiences over physical goods.
Right.
We'll have to see how that develops.
Now, the article also mentions that manufacturing is kind of lagging behind.
Yeah.
In fact, the manufacturing PMI is stuck at 45.2,
Right.
which is not a good sign.
No, not at all.
Why is there such a big difference between the two sectors?
I think it's probably a bunch of factors. Global competition is definitely playing a role,
Yeah.
especially from Asian markets.
Right.
We're also seeing the impact of automation,
Yeah,
which is changing the face of manufacturing in Europe.
Mm-hmm.
And then, those changing consumer preferences that we were just talking about.
Mm-hmm.
So it's a complex picture.
So is this a sign that the Eurozone economy is like shifting away from manufacturing and more towards services?
That's a possibility.
Okay.
And it's something that economists are watching very closely.
Right?
Because if it continues, it could have, big implications for jobs and investment and the overall economic landscape.
Yeah, for sure. And speaking of big players, let's talk about the European Central Bank,
ECB.
the ECB.
Right.
Right. They recently cut interest rates,
They did.
and this report kind of seems to support that.
Absolutely.
So explain that.
So they cut rates by 25 basis points,
Okay.
which just means 0.25%,
Okay.
citing concerns about slowing economic growth.
Okay.
And they believe that inflation is starting to cool down.
So if our listener is planning that European trip,
Yeah,
could this affect how far their dollar goes?
it certainly could.
Yeah.
Lower interest rates can make a currency less attractive to foreign investors,
Okay.
who are seeking higher returns.
Right.
And this can lead to, a decrease in demand for the euro,
Yeah.
causing it to weaken against other currencies,
Right.
like the US dollar.
Now, the report also mentioned something that seemed a bit counterintuitive.
Oh.
It said there's like a faster pace of job cuts and that the ECB sees that as a way to lower inflation.
Yeah, it seems kind of strange
Yeah.
at first glance, but it does make sense if you think about it.
Okay.
Fewer jobs can mean slower wage growth,
Right.
which in turn can help cool down inflation.
Okay.
It's all about managing those levers and trying to find that sweet spot where
Yeah.
the economy can grow without prices spiraling out of control.
But wait, there's another layer to this, right?
Okay.
The report also found that like input costs, which is what companies pay for materials and supplies,
Right.
and output prices,
Right.
which is what they charge for their products,
Yep.
are rising at a faster pace.
Uh-huh.
So we've got job losses, which aren't great,
Yeah.
potentially helping with inflation, which is also a problem. It's like they're fighting each other.
Exactly.
Yeah.
And that's the challenge for the ECB. They're trying to balance these competing forces.
Yeah,
They want to stimulate growth,
right.
but they also need to keep inflation in check. So it's a delicate balancing act.
Yeah.
And these latest figures really show how complex the situation is.
It's definitely not simple.
No.
Now, the article also highlighted some interesting differences within the Eurozone itself.
Okay.
It mentioned that Germany and France,
The big two.
the two biggest economies, are still struggling,
Yeah.
while some other countries are actually doing better.
It's true.
So what's going on there?
Well, Germany and France are facing their own challenges.
Okay.
Including, a slowdown in manufacturing
Okay.
and weaker consumer spending.
All right.
However, countries like Spain and Italy have actually seen some positive development
Oh, wow.
with their economies growing at a faster pace.
So What does this mean for someone who wants to go to Europe? Could they find better deals in some countries?
That's a possibility.
Okay.
Of course, it's always wise to do your research
Right.
and, look beyond just the exchange rate.
Yeah.
But understanding these regional variations can definitely help you make more informed decisions
Okay.
about where to go and what to expect.
So this brings us to the million-dollar question, right?
Yep.
What's the outlook for the euro-dollar exchange rate?
Well, the article suggests that the euro-dollar rate is likely to stay within a pretty narrow range
Okay.
of 1.0450 to 1.06
All right.
for the near future. That being said,
Yeah.
the upcoming Federal Reserve decision in the U.S. could throw a wrench in things.
Ah, yes.
Yeah.
The Fed. They always keep us guessing.
They do.
So what could make the euro break out of that range?
Well, a few things.
Okay.
Like the Eurozone suddenly starts pumping out surprisingly strong economic data.
Okay.
That could boost the euro.
Right.
A major shift in monetary policy from the ECB,
Okay.
like a surprise rate hike instead of another cut,
Yeah.
could also send the euro soaring. And then, of course, there are always global events that can impact investor sentiment
Sure.
and cause currencies to fluctuate.
So lots of moving pieces.
Lots of moving pieces.
That's what makes economics fun.
Absolutely.
It's a puzzle.
It is.
And this deep dive is helping us put the pieces together.
That's what we're here for.
Now, before we move on to part 2,
Okay.
let's take a quick step back and recap what we've learned.
Sounds good. We've covered a lot.
We have. First, we saw how the Eurozone economy is sending kind of mixed signals,
Yes.
with the service sector showing some resilience,
Yeah.
but manufacturing continuing to struggle.
Yeah. Definitely two different stories there.
And we talked about how the ECB is trying to navigate this complex landscape by cutting interest rates
Right.
to stimulate growth
Exactly.
while also keeping a close eye on inflation.
Yep. Got to keep an eye on that.
We also discussed how those interest rate cuts
Yeah.
could potentially weaken the euro,
Right.
which might be good news for travelers looking for bargains, but could have bigger impacts for the Eurozone economy as a whole.
It's true. There are always trade-offs.
And we even touched on how those regional differences within the Eurozone
Yeah.
might create some opportunities for travelers who do their research,
For sure.
know where to look.
Absolutely.
Yeah.
A little homework can go a long way.
So much to consider.
A lot going on.
That's why we do this,
Yeah.
to give our listener the information they need to
Yeah.
make sense of it all.
Exactly.
Now let's move on to part 2,
Okay.
where we'll explore some of these themes in even more detail.
Looking forward to it. Yeah, it's definitely a dynamic situation.
For sure.
And the ECB is right in the thick of it,
Yeah.
trying to steer the Eurozone economy through these choppy waters.
And speaking of the ECB,
Yeah.
let's go back to that interest rate cut we were discussing.
Go.
They cut rates by 25 basis points,
Right.
which, as you explained, could potentially weaken the euro.
Yeah.
But is that the end of the story?
Well,
Could we see even more rate cuts in 2025?
that's the big question.
Yeah.
The
Yeah.
ECB is definitely signaling that further cuts are a possibility
Okay.
if the economic situation doesn't improve.
Right.
They're walking this tightrope,
Yeah.
trying to balance the need for growth with concerns about inflation.
So if our listeners thinking about, exchanging dollars for euros for that trip,
Yeah.
what's your take on the timing? Should they exchange now or wait to see how things unfold?
Well, I can't give financial advice,
Of course.
but it's always a good idea to stay informed
Right.
and, consider your own personal circumstances.
Yeah.
If you don't like risk,
Right.
you might want to exchange some now to lock in a rate.
Okay.
But if you're willing to gamble a bit,
Yeah.
you could wait and see if the euro weakens further.
Okay.
So it really depends on your,
Yeah.
your risk tolerance.
Right. Right. Okay. Now let's go back to those PMI figures for a second.
Okay.
The article pointed out that while the service sector PMI was a good surprise, the details showed that input costs and output prices actually increased in December.
Yes, that's a really important detail to remember.
Yeah.
It suggests that inflationary pressures are still bubbling under the surface
Okay.
of the Eurozone economy.
But didn't the ECB say they think inflation is getting under control?
Well,
This seems like a mixed message.
it does, doesn't it?
Yeah.
And that's what makes this whole situation so interesting.
Right.
We have conflicting signals coming from different parts of the economy.
Right.
It's a reminder that economics is rarely straightforward.
Yeah. Yeah.
There are often multiple forces at play,
Yeah.
pulling in different directions.
So even with job losses
Yeah,
potentially helping inflation,
right.
these rising input and output costs could make inflation worse.
They could.
It's kind of an economic puzzle.
Absolutely. And it's one that the ECB is trying to solve in real time.
Right.
They're watching all these indicators very closely.
Yeah.
And their next move will really depend on how the data evolves.
Right. Speaking of central banks making moves,
Yeah.
let's shift over to the U.S.
Okay.
and look at the Federal Reserve, or the Fed.
The Fed, right?
They're also expected to make an interest rate decision soon.
They are.
And that could have a big impact on the euro-dollar exchange rate.
It could.
What do you think?
You're right. The Fed's decision is a key factor here.
Yeah.
The article mentioned that they're expected to cut rates as well.
Right.
But you know what's going to be even more important
What's that?
is the messaging that comes with the decision.
So it's not just the rate cut, but how they talk about it. Why
Exactly.
is that so important?
It's all about managing expectations.
Okay.
The Fed's going to use their statement
Right.
and press conference
Right.
to signal their future intentions.
Okay.
Will they hint at further cuts down the road?
Right.
Or will they suggest a pause?
Okay.
The markets will be hanging on their every word,
Yeah.
trying to figure out what the Fed will do next.
Right. Okay. So let's bring this back to our listener.
Okay.
What are the key things they should keep in mind?
Well, first and foremost, the Eurozone economy is a mixed bag right now.
Okay.
There are both positive and negative signals.
Right.
And it's really important to look at the big picture
Okay.
rather than focusing on just one thing.
So don't just focus on that strong service sector PMI.
Right.
Ignore those sluggish manufacturing numbers.
Exactly.
Or the fact that inflation might be worse than the ECB wants.
Yeah, it's about seeing the whole picture.
Right.
Second, the ECB is definitely trying to manage the situation,
Right.
but they're facing this really tough balancing act.
Yeah.
They want to stimulate growth,
Right.
but they also need to keep inflation in check.
Mm-hmm.
So their next moves are really going to depend on how things change in the coming months.
So stay tuned.
Stay tuned.
And remember that the ECB is reacting to the data
Yeah,
and adjusting as needed.
exactly. They're not just sticking to a plan no matter what.
Right. And lastly, the euro-dollar exchange rate is likely to be volatile for a while,
Okay.
influenced by both the ECB
Right.
and the Fed.
Yeah, both of them.
It's like trying to predict the weather.
Yeah,
So many factors involved.
lots of variables.
But just like you can make better decisions if you understand the weather forecast.
Yeah,
You can make smarter financial decisions if you understand what's driving the economy and the
Right.
currency markets.
it's all about understanding those forces
I totally agree.
and using that knowledge to your advantage.
Okay. Well, I think we've done a pretty good job of, explaining this today.
I think so too.
We've explored the latest data.
Yeah.
We analyzed the ECB's moves
Uh-huh.
and even thought about how this might affect our listener.
Yeah, and hopefully they found it helpful.
Me too. Now let's move on to the final part,
Okay.
where we'll explore some possible scenarios
All right.
for the Eurozone economy.
Sounds good.
All right, so we've talked about a lot with the Eurozone economy,
We have.
the mixed signals, the ECB trying to balance things,
Mm-hmm.
the euro possibly weakening. It's a lot.
It is.
But here's the real question.
Okay.
What does all this mean for you, the listener?
That's the important part of it.
Exactly. So let's imagine we're investors. We're looking at the Eurozone.
Okay.
We see that service sector doing well,
Right.
but manufacturing is having trouble.
Yeah.
Interest rates might get cut again,
Uh,
and inflation's still a worry.
right.
So knowing all that, would you invest in European companies?
That's a tough one.
Yeah.
There's no easy answer.
Right.
It depends on your strategy,
Okay.
how much risk you like,
Right.
and what you think about Europe long term.
So, if you're cautious,
Yeah.
what parts of this would make you hesitant?
Well, manufacturing still being weak is definitely a problem.
Okay.
It means some of those bigger issues haven't gone away,
Right.
and more rate cuts,
Yeah.
that could be a bad sign.
Okay.
Like people don't trust Europe to grow.
But on the flip side,
Yeah.
what if you're optimistic? What looks good?
Well, the euro being weaker could be good for some companies.
How so?
Their stuff becomes cheaper to sell in other countries.
I see.
And the service sector doing well
Right.
shows there's still strength in the Eurozone.
So it's like two stories at once.
Kinda, yeah.
One of Europe struggling to change
Yeah.
and another of people still spending money.
It's both, and that's what makes it so complex.
Economics is rarely simple, huh?
Rarely.
It's about understanding those little details, whether you're investing, traveling, or just want to know what's going on.
It helps you make better choices.
Well, I think we did a good job breaking this down.
I think so too.
We looked at the numbers.
Yeah.
We saw what the ECB is doing.
Mm-hmm.
and hopefully helped you understand how it all connects.
That's the goal.
It was great talking about this with you.
Likewise. Always a good discussion.
And listeners, this is just the start.
Yeah, keep learning.
There's always more to find out, so stay curious.
Absolutely.
Keep asking questions.
Keep digging.
And never stop exploring the world of economics.
Until next time.